What I do YouTube is 420 Trader here. We don't blaze it, we just trade it. Now today I'm gonna be talking about SPY, and if you don't already know, SPY is an ETF that tracks the S&P 500. So SPY is really important to like the broad and general markets because it correlates well with like the wheat stocks in a sense. Like sometimes we do correlate, but sometimes we don't. But generally, when SPY is like going down, then the wheat stocks are gonna fall as well. But if we rise, then wheat stocks are gonna see a rise as well. So it's important to take a look at SPY like on your watch list because whenever you're trading these wheat stocks and you see like weakness in the market, then we might see weakness in the Canadian LPs compared to the US MSOs, but the US MSOs are different because they're trading on the CSE, which are very illiquid and also have more catalysts and more hype for them. So that's why they're running up, in my opinion. Now, if we look at the daily time frame for SPY, we have our low and our high over here. We were unable to break this resistance of 285, so we started the morning with a gap down and we ended off with the on the low of the day. So what am I getting at here? Basically, if on Monday we do break to like 275-ish, then our near-term support will be 272 and 270 psychological. If we do break 270, best believe we're falling to 267. And then we fall below that, then most likely we will fall to 261, 260s, etc. and stuff like that. But if we actually get, I don't know, some good news, the Fed was dovish during the FOMC, so the market did react well on that day, which was, I believe, Thursday, right? So we did see a bounce, and then on Friday we got like weak data from Canada. The retail data was like pretty much bad, and their dollar was following. Also, we are having a global economic slowdown in Germany, and the whole deal with like Brexit, the Mueller report. It was just bad like sentiment all around the market. So we gave all the gains back and we even fell even lower. So if we do decide to bounce back, then the resistance would be 285.18 and also 290 psychological. So if we can break 285 in, I guess, this week, then yeah, sure, we can see more more all-time highs and more upside towards like March, April, and so on. But if we do break that support 272 and 270 psychological, it's gonna be pretty bad because a lot of people they have stop losses around like these supports. So if they do break, then the stop losses will trigger, causing even more selling pressure. And yeah, a lot of people will be panicking, and that's how it goes. That's how the market works. A lot of people trade with emotions, especially when they have all their money in one stock or in their portfolio, and then they don't have cash to buy the dip. They just sell, 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 and sell, hoping to buy in lower. Now, Monday, who knows what could happen? We gotta get like news about the Mueller report. So far, there's no indictments, nothing, nothing that will like cause harm to like Trump and all. But if there is like a report and Trump is like guilty of like rigging the US election with like the Russians and all that, then yeah, the markets will probably dump even harder. Now, let's get into this whole yield curve talk. Now, a lot of people on Friday they were concerned about the yield curve and what is a yield curve? Well, the yield curve tracks like the bonds. So how much the bonds will pay throughout a 3 month bond, 2 year, 5 year, 7 year, 10 year, 20 year, and so on, right? So obviously the short term bond should have a lower interest rate compared to say a higher time frame such as 20 years. So 3 months compared to 20 years, 20 years will have a higher um, interest rate for people purchasing those 20-year bonds. But recently, I should say Friday, it's starting to invert. Now, as you see here, the 3 month and the 2 year is paying way more than the 5 year. Now, why is that? Well, the Fed didn't raise interest rates. They're being very dovish, but people are fearing the recession and stuff like that. So when more people go onto bonds, that's when the yield starts to like invert, and it's usually a sign of a recession, but it's not the key sign to a recession. Like there's also many factors that you should look at, like GDP growth, economic slowdown, what's going on around the world. So this is one of the factors that you should look at that will guide you to see if we are in a recession. So it did invert a couple of times near the 2008 um, financial crisis. So if we actually play it from here, so we animate it. So see, it was flat and then it's gonna start to invert. But there wasn't no market crash. It was probably a small correction here, yes, but it wasn't a crash. See, it's starting to invert. It's still inverting, and then it's back to normal, right? The 3 months has a shorter interest rate than the longer durations, right? So my key point is that I think that once we start to invert and we go back, that is the peak point where we're at our highest, and then we're gonna see that recession fall. Like as you can see here, it's back to regular, and then we're starting to see that crash right around here. And now we take it further. The yield curve is now inverted. So to be honest, I wouldn't be so scared as of right now of an upcoming recession. There's always going to be a talk about recession, recession, recession. It's just a matter of when. Like everyone's always going to be talking about a recession. Like back when we were crashing in the October, November, December lows, everyone thought it was it was a recession. But when January came by, we had one of the biggest bounces in like history, right? Everyone thought, oh, it's not no recession, so might as well just buy back the stocks, right? So we reached a high, and honestly, you guys shouldn't have to be worried unless we start seeing more like bad news about growth, overall like economic slowdown, and when it starts to back, like when the yield curve starts to like go back to normal, that's when you should be scared. But that is all for today. Like, comment, share, subscribe, and I'll see you guys in the next video. Peace.